Hey, Darin.
Make it stop.
Darin.
Reality.
What are you doing?
Oh, you guys are
I
here.
mean, it was good for a minute.
No, that was a commercial. I wasn't really listening to that. That was a commercial. Yes, that's what it was.
Sure.
Well,
is that the fifth time you've watched the proposal video today?
There's a dual meaning here. As she is,
meaning? Girls
yeah,
like
a dual.
Darin wants to be a princess.
It's just so pretty. It's just so beautiful.
I will never get in my words.
Not after you play that song.
You're right. I might get a guy. By the way, as she has announced her nuptials or engagement, whatever, with that Kansas City Chiefs Chiefs guy.
That's her boo. Yes, that's her boo.
I'm a Raiders fan. Oh, there you go. Another dual meaning. I have now officially divorced as of today. So, that's what I was doing. Thank you. Yes. Golf claps. I get golf claps. Awesome. I hope my after party is much better than the golf claps. All right, moving on.
You got, brother.
We shan't spend too much time on that. But the NFL will the rest of the year. We know they will. Every game, they'll be like, I wonder what's happening in Kansas City. A whole nother game. Great.
Josh is holding it in. He's holding
I'm already over it.
I am I was over it last year, and now it's just going to go up to a whole other level. We're going to know every single guest.
It's a reality television show. We're going to go, Bridezilla, and
I know, but you got to be careful. We don't want to piss off the Swifties.
And there'll be America's Couple.
I don't think they're listening to this.
In that case,
other than Darin's fanboys, I don't think.
Oh boy,
lady boys.
Right. Don't be that way.
Hey, they're whatever kind of boys Darin likes.
I stayed up too late. No, okay. Here we go. So
he likes Coldplay. You know what that means.
Right. You say cosplay? Oh, Cole. All right, let's get back on track here.
Cosplay is a completely different thing, sir.
I know it. Who's going to be Taylor Swift? I'm going to be Kelsey, and I'm going to be a tight end. All right. Anyway, let's
Jesus Christ.
That's
a really bad.
That is his position. He's a tight end. That's his position. Stop it. All right.
You did that too well. The judges have voted. You did that too well.
A reality show. Arbitrage trade. The reality show. All right, let's go. My guests here are Daniel Hopwood, top right, drinking his Celsius because he doesn't have the white monster. If you guys want to sponsor us, by the way, give us a call. Bottom left is the banker, JPM. He's also a fellow.
Why does it have to be Monster?
One of the best performing stocks in the last 10 years.
And the bottom right is Quanticus Maximus, a.k.a. Rolls Royce. Say that 10 times quickly. I dare you.
Rolls Royce.
There he goes.
But I've had practice.
I was about to say you've had experience.
You had practice, and you sang that. You sing that song well too, by the way. So stroking.
Oh,
at Clarence Carter.
I was thinking,
where you missed your name instead of Clarence Carter.
You know, hey, wish baked beans. We take any sponsors.
This is the
we're not picky.
This is the official overshare version of our after the bell. I'm Darin, and I'm the dumb money, the ape, etc., etc. I don't throw poo at enemies, despite what people say. And a disclosure coming. We had shots for the divorce. No, I'm just kidding.
No.
Disclosure here.
So much.
Let me get my disclosure in here. Okay. We are not financial advisors, obviously. And this is not financial advice. This information is provided surely for educational, we hope, and entertainment purposes, we hope. Please always consult an investment professional before making any financial decisions. All right.
It's actually 50-50 true at this point because I'm registered in Daniel's registered.
Yeah,
You apes.
Yeah, but I'm not employed by a broker, so like that it doesn't apply.
So it doesn't count. Fair enough.
Yeah.
Neither am I. So
used to
let's
be.
go.
You used to be. All right.
Used to be.
So let's run down the numbers here on this NVIDIA Wednesday. We've got Dow Jones was up 0.32 or 45,565. We got S&P that was up 0.24 at 6481. NASDAQ was up 0.21. So look how nice and even and algorithmic that was. All three raising about the same. NASDAQ numbers were 21,590. The dollar 98.1, which is basically flat because it doesn't know what to do right now. WTI is up 263.84. Gold is up 234.51. The 10-year is flat at 4.235 because it doesn't know what to do anymore. And Bitcoin did get back up over 110 to 112.279. Ethereum 45.84, which is actually down. And XRP is hanging around at that $3 level. So what say you overall general analysis, Daniel, since I gave the numbers? What's going on in the market?
Yeah, I when we'll talk about it a bit more later, but when Powell gave the speech, we were coming off what looks like 5-6 down days in the market, which we haven't had in a while. And it wasn't a huge correction. We were down 3%, but we literally remade all of those gains back in literally the hour after he talked. But since then, there's been 3 trading days and we really haven't broken out of really that kind of, and so it's kind of interesting of it traded on the good news and then it paused. So it kind of, I think the markets are still I think they were waiting to digest the NVIDIA earnings, which I don't think the earnings numbers are out yet, but before we started, NVIDIA was down 3%, which really isn't that much. So I feel like it's the market's kind of neutral and it's waiting for whatever is going to be next to price in up or down of where we continue. I don't really have, which I feel like normally I do, a strong opinion of which way it's about to go.
Well, NVIDIA second quarter results. NVIDIA second quarter results beat, but data center revenue just light, as China weighs, is the headline. So that's without getting too deep into the weeds there. But I mean, in other words, it's a nothing burger so far. But there's always the
but I think a nothing burger with NVIDIA, which we can get to in a second, is kind of a big deal, right? Because if they didn't crush, then that's kind of a big deal.
You're right. It's all about China, right?
You gotta breathe. You gotta breathe.
All right, Royce, do you want to make any?
So let's talk about that nothing burger with NVIDIA, right? Trump basically has been pushing, saying, "Hey, nothing from China, period." Right, and right now that's a good thing and a bad thing, and in my opinion, because where we are currently sitting, if you guys haven't realized it, most of the data centers in the world reside in China.
They're way ahead.
They are way ahead, which is why basically that big, beautiful bill and a couple other things that have been coming through have been trying to basically bolster the economy to say, hey, let's create more jobs. Let's create more data centers. Let's go and make things where we can actually compete, and let's find lithium in Arkansas and do all these things and not have to use China for as many things as we possibly can. So in that vein of thought, a lot of pressure, it's an arms war, but it's an arms war with data. They have DeepSeek. We have all these other AIs, but can't even compete at least 10% of the bandwidth that they're currently using. So I think the fact that NVIDIA has had a nothing burger, this is the quiet before the storm. This is basically everyone posturing and saying, hey, guess what? Guess what's going into all those data centers that we're building? This quarter might be flat, but look at next quarter. Next quarter is going to melt your face, right? So a nothing burger is okay because you got to remember those tariffs. They're stopping chips from coming. They're stopping this. They're slowing down things people are hoarding. But then once we actually get to deploy mode, I think it's going to be another roaring bull market, even so much to say another industrial revolution led completely by data centers on this side of the globe.
So Roaring 20s, part 2.
Part 2.
But it's catching up. It's all of what we have to do to catch up with China.
And surpass them, hopefully.
Yeah, and all those chips have to go into all these data centers, right? And that's what's going to push.
And those servers have to be ordered. So yeah, let's watch IBM. Let's watch NVIDIA. Let's watch.
Better say Intel, because now the US is in on that. Yeah.
Yep. Because not just GPUs, it's CPUs too.
Right. And the H2O is the chip I guess we aren't shipping to them. So that's one thing that probably hit on their line. And then the 15% tariff that we all of a sudden said, now we'll allow these to go to China, but we want 15% now, which is what he's doing with a lot of things now. So, and that's probably to try to help with this deficit that we have. But and he's going to just do it with a lot of different things. By the way, today India was announced 50% tariffs. Yikes. He's slapping them around because they're still giving oil to Russia, or they're still buying Russia's oil. So he has given them a big penalty. It's
Why
nice.
is that a bad thing? Why is that a bad thing?
Oh, I didn't say a bad thing. I'm just saying that we are slapping India around right now. So.
Gotcha.
Yeah. Josh, anything you want to jump in here and say either about just the markets in general or NVIDIA?
No, I mean, I'm interested to see, what the reaction is tomorrow, because it kind of,
right.
To Daniel's point, like it was a bit of a mixed bag on earnings. I mean, they did hit it out of the park with like every number except for their data center revenue, which to Royce's point is kind of it is a little bit of a telling sign.
Yep.
Is that the calm before the storm? Are we seeing something, but the flip side is that they also did not include any of those H2O chips to China. So yes, they beat revenue, and yes, they missed a little bit on data center, but none of that included any of what was already shipped to, already been sold or already been shipped to China, which I have to assume, we're only a week and a half removed from that. Okay. That 15% agreement between the administration and NVIDIA, where yes, you can ship to China, but we're going to get 15% of it. So, I mean, I don't know. The whole thing to me is just ambiguous. I don't think it really told a lot. And I think the uncertainty is kind of, markets are really focused on like guidance, which was great. And it kind of rebounded. They expected we're going to increase revenue, however many 100 percentage points year over year. But now, I don't know. I'm kind of, it was such a mixed bag that it's really hard to react, given that we've only had like 30 minutes to digest all of it.
Yeah. And does it justify the price of NVIDIA and you said it's 8% of S&P, Daniel?
Yeah.
Yeah, that's pretty big. So I think the U.S. is going to keep up the markets. They will make sure that there's something successul there.
Absolutely.
And we don't hit that gap. There's that gap, and maybe we'll start investing in them too, like Intel. I don't know what route we're about to go to, but sovereign wealth fund. I think you and I have talked about that. Daniel is creating that sovereign wealth fund through
our Crow
corporations. What's that?
Have y'all seen Crow, Crypto.com? They had a 40% jump this morning because of that sovereign wealth fund and the U.S. investing in Crow.
Huh. Okay.
So literally it went from like 6 cents. It's over 25, 26 cents now from just this morning.
Wow.
It's been I take that back. It's been over like the last 2.5 weeks. It's been slowly rising until today, where it had another 40% jump on top. I think it was 15 cents, and then went all the way up to 26 or so. So awesome. Yeah, these sovereign funds. Yeah, every other country has them. Why don't we?
Yeah. Well, we will. That's what
we're working on it. Yeah.
So, Daniel, you think rate cuts are coming, and it's because of labor?
Yeah,
they said it's because of labor. That's the only reason they would.
Yeah, I mean, I read a few things on what's going on with the speech that Powell gave, because it was not very direct. It could be looked at both dovish and hawkish,
which they always do.
But I think that the big kind of like takeaways were that inflation's probably not going to hit 2%. Like that's just not a target they're going to get to before labor would become an issue. And so I forget what it was prior, but after he gave his speech, the expectation for a rate cut next month jumped to like 89%.
Yep.
Now I think there are some people who are probably a bit too ambitious and want like 50 bips plus. I can't imagine he does anything more than 25. But I feel like
the market's already got that baked in, as they say, is the 50. So go ahead. If it's only 25, then maybe market goes down a little bit.
And he announced it a month ahead. So that's not baked in. No.
Imagine that. Yeah.
No, we're good.
Sorry, did I interrupt your thought?
No. I mean, I think they kind of have to cut to get ahead of any potential like big jump in like unemployment. Not that I think, the thing with unemployment is like it always just spikes out of nowhere and then it's like too late anyway, right? And so I think he probably kind of feels like, all right, like the numbers, especially after that big revision for those prior 2 months were like, 90% revisions. It's like, okay, we kind of like, maybe we need to get ahead of the ball on this one. Like it's kind of looking not too great. Regardless of, inflation is probably not going to hit our target, but if we let this other thing go crazy, it's not going to matter because it's going to be way worse if, unemployment jumps to 7%. And inflation stays at 2.7 or whatever it might be.
If we all believe in those employment numbers are really at 4.2.
So, I got a tinfoil hat on right now, and and it's mainly because of AI.
Right.
I think we're still measuring unemployment the wrong way. Unemployment means people who are actively looking for a job. Since this is a gig economy, people may not be looking for a job. They're not seeking unemployment benefits. They're like, you know what? I work this job, I work this job, I work this job. I got what I need. AI is allowing me to do this side hustle, and this side hustle. And that's why it's so sneaky, because basically if those side hustles don't pan out, then people go like, oh, I ran out of money. Guess I gotta go find a job.
Yeah.
Yeah.
Go ahead.
I
was just going to say that.
Yeah. Go ahead, sir.
No, finish your thought, please.
Nope, I'm done.
We sound like the chipmunks. I'm just.
Who's on first?
Yeah. But those numbers just haven't been right. And I think when they spike, it's because they finally admit whatever's happening and they let the number rise to whatever it was before. It's just, I mean, and AI is doing this. It is taking a lot of jobs away, and you're saying it's creating them at the same time. But I also know that companies are finally starting to admit, and they're actually, I guess, press is finally doing their job and digging into why these numbers are so off, or they're being allowed to finally admit why the numbers are so off. And that's that these surveys, the companies aren't replying to surveys anymore. And so it's even less people and that are responding. And who knows if they're just making up whatever just to get a number out there. And that's what I think personally.
They pay people to take surveys, right?
Yes, that's what I'm saying. You actually get money to do it.
Sure, we're on the same page.
And they've had to
who takes these surveys? Unemployed people.
Right?
To say that they're unemployed or to say that they're employed?
To say they're unemployed. Yeah. They gotta make money.
They are employed, yeah. And then we all know that it's been healthcare and government jobs are the ones that have been pumping up all the numbers in the last 4 years. And all they need is another health situation to happen, COVID too. And those numbers are going flying. I'm not getting off a tangent here.
I'll whack him.
Yeah, I'm not getting off a tangent. But JFK Jr. is now he's being specific on who can even take the jab anymore.
It's RFK Jr., not JFK Jr.
RFK, sorry. I may have said that wrong.
He may have actually had something to drink. I'm going to have to. We're doing field sobriety tests.
I have an excuse.
I have an excuse.
A frozen slushy divorce shot this morning.
Frozen slushy divorce shot?
Sally shell, she shell, seashore. All right.
You wear them around your neck?
Yeah. Oh boy, there it is. There it is. At least one to show now, right? All right, let's please, before something happens, we're going to get out of this subject and move on to the next one and reset here. ETFs are hotter than stocks, you're saying. People are running to safety. Is that what it is, Daniel?
No, not at all. That wouldn't be logical, Darin. Okay, so I was reading about this, and I thought it was pretty interesting that there are now more ETFs in the U.S. stock market than there are stocks. So there are 4,300 ETFs on the market compared to 4,200 stocks. And this year so far, we've issued 640 new ETFs, which is 4 a day. And so I thought this was pretty interesting from the perspective of the most popular ETFs that are being launched are single stock ETFs, leverage ETFs, and inverse ETFs. And so what it's really kind of like, these are really gambling instruments, right? It's like, how would if you wanted to trade options on Palantir and, normally like a hedge fund would do that because it's a bit more sophisticated, complicated. They can have leverage and whatnot. But now without you having to worry about like time decay, contract roll, all the complications that come with doing an option is you can just buy the 3-time leverage Palantir ETF and just, hope it goes up into the right.
That's gambling. But you can sell options on those too, by the way.
Yes, I know you can, which is like kind of terrifying. Like I've bought calls on leveraged VIX ETFs.
Never buy, sell, sir.
Really skyrocket. But so it's interesting because like to your point, Royce, is that single stock leverage and inverse ETFs are not investing vehicles. They're like gambling or trading like instruments, right? Because even with a leverage ETF, it's like maybe you don't get the same time decay as like an option if you were to buy a call, but you still get time decay. And it's still like not a long-term investment. And, I hope retail traders understand that, right? You don't get to buy 3 times leverage Palantir and not have decay over the long run. But so, this is one of those things where, and I feel like, I'm shooting a dead horse here of like, this is one of those things where it's like, it's got to mark a top, right? You just have a flood of these like gambling instruments in the market to support what people are doing. And I'm not saying it can't continue, but at some point it's like, well, these aren't like real investment vehicles. And when, things start to unravel, these things are really going to unravel.
Yeah, but if you're a seller, you made out like a bandit.
Oh yeah, listen, if you can time it,
always be the
keep
seller.
Doing it.
Right.
Daniel, can I ask you something?
And
the way ETFs work.
Yes, if you hedge, or roll when you can instead of hedging.
You've done that well. When you create an ETF, you have to have shares that make up that ETF, correct?
Yeah.
I like that little yeah. So let's say that there's X amount of float to a certain stock, and you create all these ETFs out there with no stocks left. They're supposedly all bought already. So wouldn't you, if you wanted to control a stock even more, create more TFs so that you can have extra shares out there to control that stock?
Well,
because these stocks are coming out of people's butts. They're not. These shares are coming out of people's butts. They're not actually coming from the float, is what I'm saying. They're just being manufactured out there, and millions and millions and millions of shares into these ETFs. I mean, Tell me I'm wrong.
I mean, I think it does depend on the ETF specifically, right? So like if you're looking at a triple leverage ETF, they aren't potentially owning the underlying stock itself, right? They're using options as the leverage vehicle for the ETF, right? So like if you think of like the VIX ETFs, right? Like it just holds a contract for the VIX. It doesn't like own anything. I'm sure these triple leverage Palantir ETFs, like it's just holding various options contracts underneath, which is why you still get that decaying aspect of it.
Well, yeah, that's the one.
And I mean, the rest of the ETFs are all baskets. So
right.
You're not just, it's not like you're getting, they're only going to have like 8% or 10% of one particular investment, and it's going to be spread out, which to me is kind of why I think that we're seeing more of a rise in ETFs, because you get that push from, we've had such an influx of retail trade that has come in over the past few years. And that's kind of a safer, because you can invest more in like a sector versus, so if you see like, I don't, like a layman comes in and like, I don't understand, I see like gold being a new trend that's coming in. I don't know specifically which gold and, investment vehicle I want to go into, but I do know that gold is going to be a hot commodity, in the next few years. So I just want to invest in that gold basket. So they can come in and they just, and there's also significantly less risk. So, which is completely the opposite of, the inverse and the 3 times leverage ones. But
I'm completely torn. I'm about to agree with Josh.
Okay,
it feels funny.
Okay. All right. Maybe I'm onto something.
It's been one that the apes have always have over the last 4 years, because they kept creating more and more ETFs with AMC and GME in them, and then they would use those ETFs to short without showing up in the short percent, and it's just kind of a masking of how to control the stock, and that's kind of what the apes, if you will, if any of you are out there listening, and I'm trying to take your side here,
Josh.
is that, and they would have this specific AMC inverse and all these other ETFs which require more shares to run, and when the shares, when the total it's been bought up, all the shares, it's like where they keep manufacturing more and more shares from. So that was just the question. So we explored it a little bit.
Yeah, no problem. So what I think here is basically we're missing part of the market. Mutual funds, there are like 33,000 of these jokers, maybe even 35 at this point, right? And they only change overnight. And they're mixed baskets of all of these things that are out there. I think ETFs are just trying to bridge that gap, because mutual funds, they only update at the end of the business day, and then you see what the numbers are tomorrow. ETFs lets you see it real time, and they're like, we like that part of it. So we like what mutual funds are doing, but we want real time, so that way we can place more bets, make more wagers, and basically potentially make more money, right? So to Josh's point, I'm basically thinking that we're seeing a rise in ETFs because of that greed, because people are wanting to make more money and they all want to make it. Everyone likes big wins. So those triple, 3 times bull, 3 times bear, the TQQQs, the I think it's like Tesla has one as well. But all of these guys are out there. And people are like, if I can win big, they want that thrill. They want that adrenaline. They want all of that. And I think these ETFs are allowing that to happen. Even if, for example, I'm just going to keep picking on Tesla. If Tesla moves $3, this thing moves $9 because it's 3 times the move. So people are saying, you know what? Why am I sitting in Tesla? This is 1/10 of the price. Let me go play this and make 3 times as much money.
Yep.
Or lose 3 times as much, because they never think about that part.
Right.
Well, I mean, it's a lot easier than options. Like options aren't easy. I mean, you don't
read my new book. It's coming out in November. Shameless plug. Investing in options.
Yes.
Amazon.
Royce makes options seem very easy. But options,
you have no option. But
there are way more things to take into account when you're trading options than there are, just a typical, stock. But the way that these, leverage funds, you can get those same same outsized returns and outsized losses, and all you're doing is just trading that one specific vehicle. You're not actually going into all the various things. And not only that, but options have expirations. If you get upside down in a 3 times leveraged ETF, you could technically wait it out. It may not work out, but the option is
watch out for ETNs. Never stay in an ETN for more than 2 weeks. Just my personal opinion. But hey, notice, not advice.
3-time leverages, you're not supposed to stay in.
Pretty good advice.
You have to check every day. Man, the 3-time leverages you got to watch. Like, you got to be there to watch it.
And that's the other thing. The adrenaline junkies that like to micromanage. They're like, hey, let's do this.
Yeah.
Because the market's supposed to be fast. When in actuality, the market is extremely slow. And the people who usually win are the people who have more time. And as long as you can sell more time, you always win.
Yep.
Shameless plug.
All right. Let's move on to the last subject before Mr. Options. There's those two guys, and what's their names? Nigerian or something like that. They're really big on options. They say there's no. They wrote books too about options, and so there is no option other than doing options kind of thing. So the Nigerian, I think, is their name. So anyway,
but are they princes?
Well,
I need to know. I just want to know.
Don't ask me to spell their names, please.
Have they been emailing you, asking you for?
All right, let's move on to what we talked about.
Said that they weren't. Though.
What's that?
My psychic Cleo. She said,
right.
All right.
Continue. Sorry.
No, that's fine. That's fine. We have a psychic called Pips. So let's move on.
We actually use Matt. That's out of pseudoscience, sir.
Yeah. I didn't mean to put down. Pips is awesome. I don't mean to say that way.
Pips is going to come after you.
Just meaning that he can predict the future. All right. So let's go on.
Pips is about to divorce you now.
Yeah. Man, I can only take one in every, I guess, 10 years now. Let's move on to.
Woo.
The average is about 15. Okay. Anyway, let's move on. This is not about me. Let's talk about AI, and we did touch on it a little bit earlier, so we already touched it. But AI taking away jobs, basically. So, and I think it's hit the lower end of the income, to where there's a lot of things that could be done that the lower income folks have been working at, but now it's moving to middle management, middle class, and it's working its way in there now, which people who went to school and studied IT and studied these things that are needed are no longer being needed, because AI can make 3 jobs into 1. And that's why we're seeing a lot of these layoffs too at these big tech companies as well. So go ahead, and what you got to say about that, Daniel?
Yeah, so a new Stanford study came out, and it's important to note that this hasn't been peer reviewed yet. So, kind of take this with this is the first foray into how AI is impacting work. But in this study, they found that AI seems to be impacting entry-level workers the most right now. And looking at ADP data, they found that workers aged 22 to 25, so really kind of that entry-level job after college, are having the most impact on their work from AI. And they've seen a drop in hiring for software developers and customer support, really those entry-level tech jobs you would think of. They've seen a drop of 16% in hiring since 2022. Now, it is fair to caveat that the tech industry had a lot of hiring from COVID through then, and maybe it's really only started to kind of taper off recently. But it is kind of something to note because they did factor in like skewed numbers of hiring, industry volatility, and like interest rates and how that affects hiring practices at the company. And the researchers are saying this could be a canary in the coal mine for what's to come when it comes to AI in the workforce. And one of the kind of like, I don't know, comments around this that I read is that this poses the issue of, you know, when you think about like a company, it's like a triangle, right? Like there's a lot more people at the bottom and then people slowly filter their way up to the top. But if you don't hire as many people in the bottom and those people don't continue their way to the top and, you know, stay in that organization, stay in kind of the same role to progress, AI kind of creates this like compression where there's, it makes me think of Japan, where there's not enough young people to replace the old people. You know, you kind of need like a fat triangle, right? And if this triangle gets kind of skinny, it creates like a weird potential like future work environment over 20 years. Obviously, still super early, right? This is like the first study on this, but it is one of those things that, you know, even like Sam Altman has kind of been talking about, and to see it kind of maybe start rearing its head a little bit of how it's impacting the workforce is, I'll say, interesting. I'm not worried right now, unless I should be, Royce. But
no, our views align, sir. We are good.
Okay.
That's right.
I was gonna say I'm using the AI for us. So
exactly, early adopters win. Now those other apes. Well,
whatever.
One ape is right. One ape is wrong. You guys decide who's who.
I mean, we already know.
Adapt and adopt.
Shots fired.
But it's not, I mean, the interesting thing is not, I mean, yes, it is. You can say it's taking jobs, but it's also rotating jobs. Like, well, that's a terrible way to put it. It's, you got to think about when, you know, or at least for me, when I was coming up and going through college, you know, like computer science, computer programming were all very, you know, that's where, like, if your mom and dad, if you weren't going to be like a doctor, lawyer, you know, politician, something like that, then you'd be like, why don't you go into computers? You know, because this was post.com bubble. You know, this was when technology was starting to boom and everything like that. But now we're seeing that a lot of those, you know, to your point, the entry level positions for things like that. So that is a much harder job to get right out of college. I think they've said something to the effect that the people that have a college degree in any of those fields, any, you know, technological fields or things like that, are just as unemployed as those that have no college education whatsoever. And so you're not seeing that advantage that you would get with a college degree. But what it's kind of pushing people into is you're seeing a lot of people going into various like trades. So you're kind of seeing this push into things that, like, what is something that AI is almost certainly not going to be able to replace? You know, so you're seeing a lot of, you know, like medical fields, because I mean, yeah, doctors, you can get some of it replaced with AI, but you're not going to get, you know, surgeons and nurses and people who actually have to perform these tasks. And even the trades, like, you know, plumbing, electricians, things like that, you're starting to see a push into those particular sectors. So while it might be taking some jobs, it's kind of almost like a rotation out of certain fields and into others.
I can see that.
Yeah, I think it's
twice in one show.
It's making more news now.
Hey, Josh, you want to write the agenda? You're seeming to a likes with your takes lately.
He is the agenda now. I think
right,
it's taking away.
Send it next week.
It's
we'll see.
It's more news. Go ahead. Okay. Yeah, I'm just going to say it's more news now because it's taking away higher paying jobs now. So now that's making people a little more nervous. It was okay when it was taking away the lower paying jobs, but now it's taking away higher professional jobs from people. And people are getting a little nervous about, okay, that means it's going to take all paying jobs away from people, which is the extent. I mean, it's out there. That thought is, but we're starting to see the reality and the scary reality of efficiency at companies and using computers to do it when humans are humans, I guess. I don't know. So you got something to say, Royce. I see it.
I have a lot to say. And it reminds me of a show that I saw when I was growing up. And basically people were complaining about you taking their trash. It's like, who really wants to go to work? Does anyone want to go to work? Not really. They want to have the benefit to live their lives however they're doing, enjoying whatever they want. Work is a byproduct of, okay, I have to do this in order to get to do what I want, to get that vacation, to get that. So maybe we're shifting from having it's a working society or basically a society that basically is focused on how much labor and shifting more to like an Eastern type of thought where it's like, you know what? If AI can help us bridge the gap where we don't have to put in 40, 60, 80 hours and we can get accomplished in 28 to 30, why not? Why not?
I'm here for that.
100%.
I mean, it's a great idea. It will never happen.
Oh,
Boo.
there we go. There
You were
we go,
just-
Josh. There
you were
you
just
go.
on his good side.
Corporate greed.
You
Corporate
were
greed
so
will
close. You had
kill-
almost got a threefer.
Corporate greed will nuke that idea into oblivion because
Josh
they're like,
wants the
I can
matrix.
get,
He just wants to be plugged in and
can't
just
control as many people if they're not working as hard.
because if I can get, let's say, if they can do 40 hours worth of work in 4 days, they can get 50 or 60 hours worth of work in 5 days. And so now I've gotten 50 to 60 hours of productivity in the same 5 days that we're currently doing. So, you know, what am I doing?
So why not pay them half as much and hire 2 people, and you still get the same throughput?
I mean, I'm just saying I'm really glad that I'm employed by you for this train of thought, because nobody else has that same mindset.
Yeah.
Like you go ask any CEO, it's the same nonsense with this whole push of like return to office. Like your employees were happier working either a hybrid schedule or or completely remote. And yet for some reason there is this desire that like, you know, oh, I'm, you know, gonna bankrupt my corporate lease on this office building, and they're willing to, you know, make everyone miserable and suffer in the name of some kind of corporate efficiency or what have you. Or you know,
I think Josh needs to return to office after those comments.
No, will not happen.
Oh, screw
that's-
you and
and
your
that's the push.
happiness.
That's
Get
the
back into
push.
the office.
Like everyone wants to live the dream. So if you can basically make it where AI makes it easier to live that dream, and especially for the self-starters out there, for the people who are motivated, they're like, you know what? I have to do this. I have to do this every week. Let's get this out of the way. Wednesday, I'm done. I'm out. I'll see you next Monday.
It sounds like an ideal situation. I just think it, with the current thinking and mindset of the vast majority of corporate America, it won't happen.
Yeah, it's that wealth cap's always going to be there, I think. So
You're not paying them more. You're not.
But it's not even the
employing
wealth
them
gap. Yeah, I mean,
well, but all I'll say is
and I'm with you. Like if I didn't have to manage, you know, employees for if I could manage employees for 4 days a week instead of 5, like as a, you know, as an experienced manager, like I'm like, yes, this sounds awesome. I would love to just not have to deal with employees for one less day, and we can all have a 3-day weekend and it's harmony. But I guarantee you, from the top down, it's like, you know, it's just not going to happen. It's like the same concept of the failure of trickle down economics. Like if you give them a reason, like, yeah, it's supposed to trickle down, but it never actually will. And just in this way, it's never going to happen. And yeah, I might be a huge blowhard pessimist, but I hope I am on the wrong side of history with this one, but I just don't see it happening.
Yeah, because we're about to go to quantum.
But even Google has proved that this works, Josh. They are still in the office, but they have playrooms. They have basically, it's like they're there, but they're not working. As long as their job is more enjoyable, people are willing to, if it doesn't feel like work, they're willing to do it more. So I'm not saying necessarily, you know, hey, you don't have to be here, but I'm saying the amount that you're actually focused at your desk, producing, AI is allowing you to produce that faster so you can get back to that playtime.
I mean, my managerial mindset has always been this, exactly like yours. I'm more results based. Like as long as I don't care what you do during the week. Like if you have to take off, you have to go do something, take care of an appointment, take care of a family, whatever happens to whatever that may be, as long as at the end of the week, whatever tasks have been tasked to you are complete. I don't care what happens between A and B.
Yep.
Like I'm all for it.
And that's how IT works, but the rest of the world hasn't shifted that way. But notice 8% of the S&P 500 is a tech company. So that means
I think just recently Denmark's going
hard against all the other industries, trying to say, you know what, this is a better model. We're happier.
I agree. You're just going to have to convince a lot of boomers.
Hey, boomers are going away.
What?
I'm not gonna.
Hi, Darin. Hi, Darin.
I just got free.
So long, farewell.
I'll be there saying goodbye. Yeah.
Wow.
I was thinking during this talk that Darin probably calls his office the playroom.
Yeah, I could bounce off the walls. Yes.
Mm-hmm.
I have a jacket for you.
Yeah. Yes. Is it straight?
Just for you.
All right. That's a good segue. Let's move on. As they're trying to get rid of the old guy.
And some inshore if you need it.
Sure.
All right, Royce. Before we brag about your pick, let's. Do you have something this week you want to chart you want to talk about other than the?
Okay, let's see. I have two. I'm going to basically talk about. My pick for this week is going to be LB, but I want to talk about Coke one more time.
All right, so this is Crayons and Charts with Royce Wells after the bell.
So I'm not sure if you guys have been following. I'm pretty sure you guys have been following. This guy was one of our bets a few weeks back.
All right, hold on. It did not pick up.
Whoa, Nelly.
Who said that? Hey, we're going into football season. We didn't even talk about that yet. Yeah, I thought I put this in here and it just didn't take. So we'll just do this then. Boom, boom.
Was that a false start for you? Offside, 10-yard penalty.
Flag. All right, we have Coke up on the board. We're obviously going to do some little.
Wait, are you doing Coke? Or
Go ahead. Is Coke lined up? Is that what you just said?
Yeah.
I'm just making sure I heard it right.
And then he said, "Are you doing it?"
Oh, good. Now we're recording. Okay, good.
All right.
So, been following Coke. I actually have been paying cash secure puts on Coke all the way since it was about 111. So basically, it's been a good July and very good August so far. It had a few dips, but overall, still good, still great. On the weekly time frame, been watching it as well to see if it actually can make it up to this black line. That's at the 124 point. Just so you guys know, if you've never looked at the bands before, for people who are just joining us, anytime we see the black line come off of the band and our trend top and trend bottom is butting up against this black line, there's a good chance that probability will allow this guy to expand and potentially make it all the way up to maybe even 160. If we've been watching Coke for a while, almost all of 2025, it's been a great big disappointment. But now basically it's been bottoming out, and there's a potential for it to actually do something worth talking about. Looking at this guy on the monthly chart, so basically everything that we've seen has only been technically 2 months worth of up. But notice that red X that's sitting up there. The thing that you should keep in mind of and take note of is this pink line from Z Pro. It's been out of bounds for a long time. So I do think that there is a correction coming for it. On the Apocalypse Band, on 128% on Z Pro. That's way over 100%. So from that and looking at that, there has to be an imminent fall that is coming. Unfortunately, we don't know where that number is because we don't have that much history on Coke from where we currently are. But support seems to be somewhere around $90.92. The first line of defense for this guy He's sitting right on top of it, 117. That's where the compass line is sitting on our monthly chart. The trend bottom is sitting at about 113.67. So if we saw it pull back, that's where we try to see if it would hold that as a resistance point. So now I'm going to go back to this daily time frame and see where the bottom of the arbitrage band is on here. And basically, if it breaks past 113, it can get probably as low as 102 before it's forced to bounce. Notice that the dashboard also says about 105. In order for this buy trend to continue, and this has been a very slow uptrend, so more than likely it's going to be parabolic and have a little bit of a little pull up and a little pull down. So this is the up portion of it. More than likely, it's going to go down to about here and then finally end up going even higher, allowing probability to expand and pull us further away. So with that being said, I do think that Coke long-term, maybe 129 is the target for the year by December, and anything past that is anybody's game. All right, that's all I got for crayons and charts. Back to you, Darin.
All right, possible 10% increase there then is what you're saying.
Yes, sir. But watch out for that 10% fall too.
Yeah, that's right.
Don't only hear the good, hear the bad as well.
That's right. That's right. Because you gotta fall and then to go back up. So
you gotta get up to get down.
Go back up. There you go. I'm not singing it. I don't know enough of the words. That's the only words I know. It's also a beer.
I don't know why.
It's a beer made in Memphis. That's right. I was going to say that. Absolutely. It's a good one too, by the way.
Yeah, absolutely.
All right. So speaking of Royce Wells, he has won. He won. Yeah, I know. And both apes are like shaking their head because the stock was American Eagle Outfitters, and we're just going to have a total Taylor Swift. That's the word she would use. Totally. From beginning to end. AEO was the stock that we had as the bet. And, we were kind of popping our collars. The apes were all week long until this whole engagement fiasco, at least it's a fiasco for us, came up. And then American Eagle popped. It really popped 10% or more. What was the reason, Josh? Did they mention that we're going to sponsor them or what?
No, I don't know. Travis dropped some commercial for American Eagle and
90 exclusive items.
Yeah.
That's August 27th to September 24th.
He was dropping that AEO drip all day, and everybody's like, "Oh my God, let's go buy AEO."
I think Royce did that. He started that campaign
over
the weekend.
Anybody can release any press releases that they want. It's not insider trading.
Yeah.
He said, "What I got to do?
Give it to the press desk.
What I got to do? Get it out of the apes channels." All right, so Royce, you are the winner. You're gonna run over that one. You're gonna do AEO or no?
Nope. I'm not doing AEO again. Let's switch horses. We're actually gonna do LB, Land Bridge Company. No problem. Anybody knows what this is or how this is gonna go. But I like this one because it has lots of mixed signals. We're sitting at the bottom of the band, and I used our arbitrage indicators on arbitragetrade.com, shameless plug, to basically find this guy. And looking at him, basically the trend top has made it over the black line, but the trend bottom is still underneath. And these candles still can get all the way down to about $50.15 before it's being forced to bounce. The Z Pro is still solidly in a sell, and there's not enough history, I guess, to basically make the apocalypse band talk. So we're going to go down to the 4-hour time frame. And we're seeing that basically he's not far from the bottom either, with the long-term trend being a sell and the short-term trend being a sell. But to that point, we have about a $5 range on this guy from about $50 to about $55. So it's anybody's game. Let's actually just make it 51 to 55. So that's the range, and let's see how this shakes out. And because I'm no damn dirty ape, I'm going to give it to Josh to have the first pick.
Wow. Okay.
Wow, that's bold. All right.
I like the little curveball.
Hey,
I am
reciprocity, brother. Remember that.
Oh, I see.
Banana.
Oh, there it is. There it is. Okay.
You see what I did
I
there?
knew there was a catch somewhere.
Tis
Okay, so
better
what's
to
the,
give than to receive.
you said 51, so we got $1 ranges. Let's
$1
go.
range.
It's 51, 52. I'll go 53 to 54.
Okay.
All right.
I am not confident about this at all. Like the charts, it's a new stock, so the
This
charts.
is a tough chart to read. Yeah.
Yeah,
And that's one of the reasons I picked it. I'm like,
this
it's
one's
hard.
a crapshoot.
It could literally bounce off that black line and keep falling, or it could go right over and keep rising.
All right, who's next, Royce?
I'm gonna let you go, Daniel.
I'll go right below Josh.
Okay. So that's 52 to 53.
Yeah.
Okay. Excellent. And now let's see if I can throw a curveball and surprise Darin. Darin, go ahead.
No, because this
No,
is
go ahead, sir. Go ahead.
this is not right. Because it's going to be the opposite of what. Oh man, of what you end
This
up
is like
with.
playing poker. You're good at that. Let's go, brother.
Dude,
Yeah, this is. I need more time to read your tells.
I will say if Royce wins this week, I'm done. I'm out. I'm out. Like this is like the ultimate chess move. This
yeah,
is
it is.
establishing-
Let's
This is
Especially the
establishing
one
dominance in a way that I'm not
Because you
prepared
two
for.
took the middle. Because you took the middle, and I don't
Okay.
necessarily agree with
So
the
where are you
upper.
going? Going up or going down?
I got to go down. I really do.
Oh,
Thank
I
you.
really do.
I knew it. I knew it.
I mean, I was going to go up. No,
No, too late.
No,
Sir,
no,
you
it's
picked-
recorded. It's recorded. It's on the record.
No.
Yes, sir.
I feel good about down. All right.
54 to
Okay, good,
55
good,
was
good.
my
As you
backup
should.
choice.
In your range to begin with, so yeah.
Yep.
Let's see if we can stay there at least for a minute.
We got 5 days, five trading days. All right.
Yep, and I'm taking the extreme top. So let's go.
Yes, you are. So you're waiting for a big jump. All right, guys. Appreciate this. Hold on. Do I have it queued up, ready to go? I don't know. Should I-
No, end the show.
Again.
End the show.
Should I
Don't play this
end it
damn
the same
song.
way? All right. Here we go.
Boo. Boo.
Let me go nap.
All right, that's enough. We get demonetized if it's over 6 seconds, right? All right.
There, technically, if you played more than 8 measures, we can get in trouble. So don't do that.
Or you could just mute the whole thing.
No, nobody dropped the F-bomb. I don't have to mute it this week. All right,
I'll do better next time.
All right, guys. Have fun. It's the first weekend of college football for those sports balls fans out there. There's 2 of us. All right. Take care. We'll see you next week.
See you next week.
Bye.
All right, bye.